Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, May 27th, 2025. Today's episode begins with our headline, Nvidia earnings tomorrow. When you buy one share of SPY or VOO of the S&P 500, you're getting all of these companies, and you're getting a little bit larger chunks of the bigger companies because it's market cap weighted. As you can see, Nvidia is one of the largest pieces of the entire S&P 500, rivaling larger than a quarter of the entire finance industry. It appears to be just as big as all retail trade of the S&P 500 and much larger than all consumer services, utilities, all of these other ones. Humongous company. So tomorrow's earnings after the bell for Nvidia are consequential for the entire stock market. And with its PE ratio trailing 12 months being 46, it means that anything could happen, even if earnings turn out to be really great. If it's not like super great enough, according to what markets are expecting, it could crash the entire S&P 500 after hours tomorrow. A normal valuation for a company is about $20 per dollar of earnings. $46 assumes that the earnings is just going to keep growing and growing. A lot of growth is priced into Nvidia, and if we see that even slow down a little bit, then watch out, especially as more competition comes alive, as in any industry will occur. Believe it or not, the world does need a lot of semiconductors, but it doesn't need an infinite amount of semiconductors, which is why my crystal ball tells me more than anything, Nvidia could end up sending the entire market downwards tomorrow after the bell. But that's just me and my crystal ball. Next headline of the day, Trump's negotiating tactic is getting old and it still works. Europe, you're not negotiating with me? Okay, 50% tariff. It starts tomorrow. Oh, you're willing to negotiate? Okay, fine. We'll push it off another month. Time and time again. Asks for the world, this is what he does. He's a real estate tycoon. This is what he does. He offers on a building that's clearly worth $1 billion. He says, I'll give you $100 million for it. And they're like, oh, no, it can't be that much. And then he gets it to the, situation that he actually wants. And the whole market, the whole world is starting to, I think, wake up to this fact. And it's honestly bullish for stocks. I mean, we're in a situation now where until we get hard data that suggests there is more slowdown coming, or if markets start seeing, if Mr. Market starts looking into his crystal ball and starts worrying, these tariffs, they are real and they really are coming and they are enough to upset business, enough to make earnings contraction, plus, look at the fact that basically all financial assets are in a bubble right now, and that could send things south too. But the immediate shocks and reliefs of Trump's negotiating tactics, I sense, may end soon. The next time he slaps on one of these, hey, we're going to tariff you 100%, Finland, because, you're not talking to me the way I want you to talk to you. And eventually the market, in my opinion, is just going to, shrug this off as, we don't believe you anymore. He's he's going to become the boy who cried wolf eventually, in my estimation. But anyway, we have charts to look at, and I do want to talk about a number of things before we get there. Community topics: what moves, if any, did you make today? Robschild buys URA puts on the uranium industry. So there's a few pieces to walk through regarding buying puts on URA. First of all, it's been obviously getting retailer attention, as over the past 2 days we've gone up by, let's see here, 16.5% in the URA uranium industry. So first of all, the big red flag is it's getting popular with retail, and it can go higher, but you take a look at the price action here. We're at now basically a double top since its high in October of 2024, suggesting that there are definitely sellers waiting here. My strike price, by the way, of my puts is at $30. I got some for actually this Friday, believe it or not, and 1 week later. Besides that, the price of uranium, the spot price of uranium, has not been soaring. In fact, when we scroll out to a 10-year history, we can see that uranium was quite a lot more expensive in January of 2024 at $106 a pound versus currently $72 a pound. Add to this, the largest and, most profitable uranium producer is Cameco. The ticker is CCJ. And when you take a look at its financials, its earnings is not abnormally small, and on top of that, its current PE 12 trailing month ratio is 147 right now. That's enormously high. And so what it's currently doing, what the market's currently doing, is sort of assuming that we're going to get back up the sort of the profit margins that we had all the way back in like 2010, when they were earning a peak of trailing 12 months earning per share of $2.78. But even that is like best case scenario, and we're still getting only down to a PE ratio of around 20, not super cheap for a company that essentially just gets stuff out of the ground. Part of the reason why uranium has to stay cheap and Cameco is forced to sell it at a certain price and not sell it at too expensive of a price is because if uranium gets too expensive, the juniors, all of the land in Canada, there are so many companies that want a piece of the uranium industry but can't do it because uranium isn't high enough of a price. Cameco does not want competition in this space and will do anything to keep the price where it needs to be for them to maximize their profits. And so that means keeping it low enough so that no one else can invade the uranium space. These are all reasons why I am not personally more bullish on uranium. So, tiny little position, but I bought puts on URA today. Coming up, continuous tariff updates as always, as this is just going to be the news every day, I guess, for the foreseeable future. We also we're looking forward to federal budget updates from how the Senate's going to affect the spending bill. And then we have Thursday GDP first revision. Mind you, the preliminary data coming out for quarter one of 2025 was negative GDP. If the first revision is even more negative, that could really rock things around. We also have a lesser followed item that is important to follow, the M2 velocity of money supply. Today it was released that the M2 money supply did expand, which is, it means that the world's not completely falling apart. This is a good time to remember during the entire great financial crisis, the money to supply was increasing during that entire period. And it's the velocity of M2 money supply that matters more in terms of what's going on economically. During every gray bar recession, you can see that the speed at which $1 moves from person to person, institution to institution, etc., this goes down during every single time we get a gray bar recession. And lately, it's been ticking down. We had quarter four of 2024 ticking down and quarter one ticking down as well. So I believe what the update is for this Thursday will be to maybe get a revision on this. So we'll see how that works out. We also have jobless claims, initial claims, and continuing claims. This is hugely important. If this explodes to the upside, as many people are sort of expecting, eventually, watch out, markets. And then Nvidia, like I talked about at the beginning of the episode, has earnings after the close tomorrow. Then Friday we have the PCE data. This is the most important gauge for inflation for the Federal Reserve, the central bank. As always, thank you for watching, subscribing, commenting, and supporting. The subscription button is right over here. And this is the support information also in the description. Thank you very much for all the support. Before we get to the charts, daily reminders, macro views, no updates. Read my website. Click the link in the description to read through these extremely important items. And no changes to the crystal ball readings nor the Robschild portfolio except for the URA put position that I just bought today. One last headline that I didn't include I want to go over before we get to the charts. The Conference Board Consumer Confidence Index came out in headlines as being described as less bad. So it did tick up, but, during the great financial crisis right in the middle of it, it also ticked up before heading much lower. So I would suggest to take this move up with a grain of salt for now. On a basic chart standpoint, the expectations index appears to be nothing more than what we might call a dead cat bounce at the moment. The good news, quote unquote, is 19.7% of consumers expect business conditions to improve, up from only 16%. So these numbers, this isn't like everybody's like excited about the future. It's like, there's a little less pessimism according to the conference board, according to this report. This does not change the other separate University of Michigan Consumer Sentiment Report, which is the lowest that it's almost ever been in its last reading. On to the charts, the S&P 500 went up 2% today on a closing basis. That is a very, it doesn't seem like a large move based on what's been going on in the S&P 500, but that is a large move. Don't take that the wrong way, but, it's also not breaking this previous high here, and so I'm not sure where Mr. Market's going to take it from here, but it was a broad-based rally, the advanced decline line ticking up along with this, and then the VIX also cooling off, notably below the 20 level, and also we're out of backwardation back into contango in the VIX futures term structure. Pretty big update chart-wise on TLT, my favorite place to be, only because you can see very clearly that we've been in this downward channel here, and however you want to look at it, whether you want to connect this candle with this candle and, these two candles here, we just popped right out of it to the upside, or, worst case scenario, we connect these two, we also closed well above that. Or even if we take it all the way to this high here and connect it to the tops of these candles, like we're above any trend line that you can possibly draw. And that tells me that this is fairly bullish looking. We will want to see confirmation above this channel to get even more bullish, so we need to close above today's wick in TLT. But as it stands, TLT, my favorite place to be, is finally looking like it's not falling off a cliff, and actually is looking very bullish based on this little chart pattern here. Next chart I want to talk about is actually Bitcoin. We are currently in a small bull flag, still within the bottom 50% of this red candle here, suggesting that, it's very likely we'll get a measured move down to the around 104 area before deciding where to go from here. I bring this up just to emphasize that although the S&P 500 rose quite a bit today, the patterns are suggesting, Mr. Market's not totally excited here. Like, the VIX cooled off, but, Bitcoin being sort of a good measure of global liquidity of, are we really on risk on or not? Very, very short term, it looks like it'll probably settle before getting more bullish. If it gets more bullish is the way that I'm sort of seeing it. Copper today gave up some of the bullish movement on Friday You know, and this isn't one of these healthy bull flag looking things. This is I went up the elevator, now I'm going back down the elevator. A bull flag needs to look a little more like a right angle going out like this, and a straight move down like this suggests more of a blow off top kind of a thing. So it wouldn't be surprising to me if we got straight back to this fight zone that we were in before. But we'll see. It's important to keep a close eye on Dr. Copper. After all, he does have a PhD in economics. Next, crude oil, just daily reminder at this point, we're still at the similar price that we were in 2021, all while supposedly inflation is happening. Everything's more expensive. Oil's not more expensive. It's cheaper than it's been in years at this point. And last chart of the day that I've brought up a lot of times before, and I'm going to bring up again, besides when oil went negative $37 a barrel back in 2020, crude oil has never been cheaper to gold, or you could say gold has never been more expensive to crude oil. Big mismatch here. I'm thinking gold has to go down in price, and or oil. Crude oil eventually needs to go up in price a little bit. This is a historic valuation mismatch between crude oil and gold. There's a little something called reversion in finance, going back to normal historical averages. This chart right here is one of the reasons why I cannot get myself to invest in gold at this moment. So all in all today, biggest pieces of news is probably a breakout on the TLT pattern. It's starting to look really bullish, for better or for worse, and Nvidia earnings after the close tomorrow. Those are the real two giant things coming out tomorrow. And that's all for today. That's all for me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.